Hey everybody, it's Jimmy and Bob back at the Cash Flow Tactics mind map. We couldn't get our screen flow to work today, so you're just going to have to stare at the PowerPoint and the mind map that we show you. But hopefully the audio will be okay.
It's a pretty exciting mind map, so it's not
Yeah.
too much of a bummer. All right, so what are we talking about today? We are in the real estate basics section, and we're going to talk about the major key differences between renting a property versus having a lease option tenant buyer in it. This has really stemmed from us struggling through owning regular rentals and really going through the school of hard knocks. I mean, I think at one point we had 10 regular rentals, and they were just driving us absolutely bonkers. Dealing with tenants who really didn't have any skin in the game, were just scraping enough money together to put down a security deposit, really didn't care much for the property, so they're tearing up the house. We were always chasing rent, always spending a lot of money on repairs and maintenance, make-ready costs when a tenant left, and really at the end of the day, our numbers that we had on our Excel spreadsheet for what we were supposed to cash flow on a property never ended up actually hitting our bank account for some reason.
And I don't feel that bad because the last two masterminds we've gone to with other people with our type of portfolio, everyone's coming to the conclusion that regular rentals really don't cash flow.
Yeah.
With the maintenance and the make ready, at the end of the day, it's not like they say it is in Rich Dad Poor Dad, where you can just live off the cash flow.
Yeah.
They only cash flow, I guess, if you pay cash for them or pay them.
Yeah, or at least really fat down payments. And not to say you're not making money, you still get some principal pay downs, some tax advantages, everything else. But regular rentals, it's just a tough business, flat out. There's no two ways about it. So
you have to pay more money, more maintenance costs for a worse tenant.
Yeah.
At the end of the day, that's how I look at it.
Exactly. And we really stumbled upon lease options pretty much purely out of desperation. We had these 10 houses, a lot of capital was tied up. We weren't making any money off of them, and we really just started searching for the answer and stumbled upon lease options. And within a few weeks after kind of hearing about it, we had our first non-refundable option deposit in hand, and that is one of the key differentiators with lease options here is skin in the game. This is really the glue that makes lease options work. And basically, we're dealing with somebody who has an ownership mentality. If you look at most estimates out there, roughly 80% of people who want to own a home currently cannot own a home because they cannot qualify for a traditional mortgage. It's still very tough to get a mortgage these days, even though things have loosened up a little bit over the past couple of years after the 2008 kind of real estate crisis. But still, in general, a lot of people don't have a credit history. A lot of people have bad credit. There's a lot of entrepreneurs, people who are self-employed, don't have enough tax returns. So a lot of reasons why people...
I have a friend that can't get a mortgage on her house because she changed her business from a LLC to an S Corp or C Corp.
Yeah.
So a minor technicality. So bankers are like, nope, you don't have 3 years tax.
I'm sure she makes bank. I'm sure she's got a
huge
huge down
well.
payment.
Yeah.
It's ridiculous. So there's a lot of people that are operating outside the system, and as entrepreneurs, we're basically filling that need in the marketplace for these people who are quality people. These are good folks, and a normal bank just won't touch them. So the key difference here is that these people do want to own a house. So in general, they're going to take much better care of your house. They've got a lot more wherewithal in general, a lot more financial education. They've got the ability to put some money into the house to fix it up, make some improvements, what have you. But back to this non-refundable option deposit, most homes, you're typically going to get 1 month's rent equivalent as a security deposit. So let's say you're going to rent a house for $1,000 a month. You might get $1,000 security deposit plus the first month's rent. Now, if you were going to lease option that same house,
and there are professional tenants out there that they save up enough money for first and last month's deposit, and they know that's all they're going to pay their landlord.
Yep.
And they're fine with moving every quarter. And then
exactly.
They know if it's an untrade landlord.
Every quarter, they probably don't have to move every 6 months. They know how to play the game right. They scrape together 2 Gs. They move in, then day one, that's all they're going to pay you. And then, 30 days later, you realize you don't have anything from them. And then hopefully you're on the ball and you can evict them quickly. If not, it could be 3 months on the short end. If you live in a state like California, man, I would not want to be renting properties out there. I don't know how those guys do it out
It's
there.
like upwards to a year.
Yeah, yeah. So that's what we're really trying to do here is we're limiting the professional tenants by finding people who can, put together a decent down payment on a house. Nothing crazy, but 3 to 5% of the value of the home. For most of the properties that we're turnkeying, this is anywhere between $3,000, probably on the low end, to as high as $7,000. So from somebody putting together $1,000 security deposit versus $3,000 to $7,000, they've got a lot more to lose. So they're vested. They're going to make sure they pay you on time. They're going to do everything they can not to walk away from that money and walk away from that property.
And it protects us us and you if you become one of our turnkey buyers. If they pay you $3,000 for an 800 a month rent, if they do not pay, you're covered for that vacancy.
Yeah.
Where a regular rental, you are not covered.
Yeah.
And you're paying for another make ready.
Yeah. So in the worst case scenario, exactly, you can get them out. You're not really out any money because you got that deposit. It gives you time to find another tenant buyer. You're going to get another option deposit. Not that's our goal. We screen people very well, but life happens to people. They lose their job, get in a car accident, what have you. Can't work for months at a time. So it's really just protecting the downside, and that's the key difference from a good investor to a great investor is really finding those situations and protecting against the worst. The other great thing about tenant buyers is they have sweat equity in the property. A lot of these people, they really want to make the house a home because they're going to eventually buy it one day. So, they're painting the walls, they're putting tile in the bathrooms and then the kitchen. They're putting hot tubs out back or adding additions to the home. They're really putting a lot of work into these homes, and they're actually making your collateral, your asset, more valuable at their cost, which is pretty amazing.
And the way I look at the trade is us or you as a turnkey buyer, you're leveraging their credit. The trade is between your credit and their time and their effort.
Mm-hmm.
You're very liberal with leveraging your credit so that they can live in the house, and then they're very liberal with their time and their sweat equity. So that's the trade right there.
Yeah, exactly. A lot of these people, there's no other option in the marketplace to buy or rent a home. So we're really providing valuable service to a lot of good people. There's also very low maintenance costs because the tenant buyer is responsible for most of the day-to-day stuff. Now, if there is an issue that arises that is going to affect the value of the asset, let's say, for example, a storm rolls through and a limb falls on the roof, and now you got a gaping hole in the roof and water's pouring in, we do recommend stepping in and taking care of things like that. But, your hazard insurance policy is going to cover most of the big ticket items. There's not many items you're going to have to step in, but you do want to protect your asset and protect your money.
And as a turnkey buyer who is using this financial plan, you're not going to be getting nickel and dime by leaky faucets or leaky toilets that a lot of management companies they have to pay someone $20 an hour just to drive out and fix that leak. So your cash flow will not be getting chewed up and nickel and dime by tiny maintenance issues.
Exactly. That's a huge point. I mean, that is the biggest expense that most people kind of really don't calculate and budget for when they're buying rental properties.
Absolute infinite liability.
Yeah, you're always on the hook.
And it's not like it's not something that slaps you in the face right away, but it's over time. It just kills your return.
Yep. The other thing here is we do have potential for above market rent. We make this more of a negotiation when we're placing a tenant buyer. There's really not a lot of other homes on the market available on a lease option. And we have that 80% of the market that we're talking to. So putting ourselves in a great supply demand situation. So a lot of times we can get, $50, $100, sometimes 200 or more per month above what, the same house right next door is going to rent for to a regular tenant. Also one of the key things that we do here is we really take care of all of the documents. We have a lot of properties we've been managing. We've got some of the best attorneys in Missouri on our side, and they've really combed through our documents, and we put these through the ringer and had to, evict some tenants and really square away things. And so you are now benefiting kind of from the school of hard knocks that we've gone through, and just piggybacking onto our system. We've got a system for everything we do here at Joint Ops Properties, from buying a house, identifying homes that are going to make good investments, to marketing those homes, to finding and screening quality lease option tenant buyers, and everything else that you can pretty much think of. So I don't know what other documents we've got in here. We got a few attachments. What is lease option? Yeah, so you get this mind map. You can click on here, and we go through some more detail. There's also a few more videos on our YouTube page. Notes and deeds of trust. I'm not sure those are really applicable here, but there's, they are good to have here. So a lot of good resources here in this mind map. So if this is interesting to you, check us out. You can go to cashflowtactics.com. You can also text us.
797, text cash flow to 797979.
Wow, that was impressive.
Ooh.
I wasn't sure we would be able to pull that off for you, but we did. So there you have it. That's it for this video. Hope you enjoyed this, and we'll see you at the next video.